If you've ever tried reading the COT reports from the CFTC's website, you will know how daunting it is to understand and read, especially if you are a Forex pair trader, a currency trader for that matter, who trades currency pairs. The example is this. For example, you want to read Canadian dollar against the US dollar. What you're going to find yourself doing is, this first place here is the Canadian dollar. And now you're going to have to read all of this, and you're going to have to scroll down and search for the US dollar, and the US dollar is right here. So this means you would actually lose information unless you want to start writing this on a piece of paper. In this video, we are going to be tackling this issue. Matter of fact, we're going to be doing a little bit more than tackling this issue. We're going to be making it easy. I'm going to be making it in such a way that you do not need to read the COT reports. In fact, you don't need to read the reports, but each report that comes out, you simply download, hit the refresh button and some filters, and you have a clear bias of what the COT data is saying for every trader in terms of what bias they are having based on the amount of contracts they have. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. Personally, I do not use the CFTC's website when I want to determine my bias in the market when it comes to COT data. What I prefer to use is a website called investmacro.com. And what I do here is, whenever I come to this website, I'll go to COT, I'll click on Excel download. So we'll be needing this page in a short while, but what I then do, I proceed to download the zip file, and then I would download this zip file. So I've already downloaded this zip file prior to this point for this video, and this is the zip file. When I unwrap it, I have this folder here. So what I did is I create a folder, right? I create a folder with the date in particular. So this particular report is 20th of May 2025. So I created a folder 25/05/20th, and in the folder you'll see all the COT reports for all the instruments in the market. The good thing about this position, unlike the CFTC's website, is on the CFTC's website you can't find the history of previous trade. Instead, you just see changes whenever you're looking at the COT report from here. But in this place, you have a 10 years record. So I'm going to just open one of this so you see it. You have a 10 years record. So you can see 2015 October is when this started from, all the way till 20th of 2025 May. So you have a 10 years record for each instrument in the market all the way down. Now normally you're supposed to just append this with Excel and you're done. But what we're doing here is we're doing a little bit of calculation. I mean, the first move is always going to be difficult, right? It's going to take some time, but once you do that first move, every other thing after that is easy. I mean, when you make this first move, whenever you get new data, you simply just go to the query, you do a filter, you refresh the data, and that's it. The new information is going to pop right out. How do we achieve this going forward? For this example, I already have 2 weeks worth of data prior to 20th. So we have the 6th and the 13th information release. So we're going to work with the 6th and the 13th so that you see exactly how to incorporate it. And then I'm going to show you how easy it is to add up the newer information whenever you get new information. For us to work on this, I'll simply just open a random Excel file. The sweet thing about this process is it is free. You don't need any software, any extra software. You just need an Excel file. I think Google Sheet can do it, but I'm not too sure. But you just need an Excel file. All you need is any Excel that's able to do Power Query. So this is my random Excel file. Open blank, and we'll just go to data, get data, from file, from folder. It's going to ask you what folder, so you're going to locate the folder where it is. Now I stored that information like I said, like I showed you guys, I created a big folder called COT data, and in that folder I unpack the new reports into a new folder and then drop it here. Automatically it's supposed to know that there's a new folder that has new information. So what I do is I'm going to select this COT data. I don't need to drill down, and I'll just say open. Now it's opening the COT data. I'll transform data, and I have the Power Query box open. I personally like to see the status bar at the top. Well, I don't need much of this. Matter of fact, I don't really need this. So all I'll simply do is I'll click on this last folder. It says folder path. Alright, click on it and duplicate the column. When I duplicate the column, I'll simply click on split column by delimiter. Now, in your own, it might start up as just colon. So what you simply do is you just take this and set it to custom, and then you use the /. Make sure you set the split tats to each occurrence. Every other thing here doesn't matter. You just press OK. So what that does is it splits it into different columns, and this is the reason why we had to give the file folders a specific name. Let me show you. When we gave it specific dates as names, it's so that we can easily identify the latest data, the latest folder. That is why I suggest you should name this as a date, especially the date it was released. Now, between this and this, I do not need any of these copies except the date part. So I would delete all of this by removing columns. You'll see why this is important. So over here, I'm simply going to sort descending. So you can do it from here, or you can do it from the top. So whichever one is fine. I'll sort by descending. Why am I sorting descending? I want to see the latest folder at the top and the older folders at the bottom. In this case, I'm dealing with 13, so I don't really want to see the data from 6 because I just want to have one folder, because that one folder also always has whatever it has all the way till 10 years ago. So we're going to say OK on this. Now this is the tricky part. There is a formula you need to take note of. I'll put this formula down in the description below. This formula is the formula you're going to use to further drill down in this report. What you do is you go to add column and you say add custom column, and then you put this formula. So I'll call this column expansion, because that is what it's actually going to be doing for us. It's going to be expanding the information, and we click on OK. So what it does is it tells you table, right? Table. So it's looking to produce the table underneath each and every one of this file if you click on the table here. But we're not clicking on just one table because we want each and every file to give us the table. So what I'll do is I'll click on this expansion icon here, and you can see it's giving me every column. You click on load more so you see all the columns. It's giving me every column that exists in each and every one of these tables. This is the part where our analysis starts to work. All we need are gross longs and gross shorts. We don't need any other thing from the COT data, just the gross long and gross short of each participant in the market. So we're going to start like this. First and foremost, we need the date, we need the symbol. Now we have open interest. We don't care about open interest. Commercial net positions. We don't care about their net positions. We only care about their gross longs and gross shorts. So commercial gross long, commercial gross shorts. We're going to go down and you're going to still see speculators. So these are the three market participants. We have the commercial participants, the speculators, and the small traders, which are the retail traders. We're just looking for their longs and their shorts. That's it, nothing more. All longs and all shorts only. Now we have the longs and shorts, and I'll say OK. Instantly, Excel is going to populate all those tables. It's just going to bring out those specific columns from each and every one of those tables. You can see it, everyone right here. I don't want to go through looking through too many files. So what I'm going to do here is I'm going to select all of these columns that started the whole work. Since we no longer need them, I can then go ahead and delete these columns. So now this is everything we need to work. Over here, the date is looking quite shabby. to get a proper date, we'll simply add from example, and we'll say from selection because we had the date selected. We're going to rename this as dates, right? And we're going to start working date. So this is the first one is 13/05/2025, and instantly Excel is able to populate like the rest dates for you, but it's not populating it correctly. You can see they're all saying 13/15, 13/15 and other stuff, but it is fine. It is very fine. You just need that date to show up as proper date record. I'm going to move this all the way to the beginning. On this filtered row, we're going to come back and we're going to unfilter that row. We kind of need them. Waiting for Excel to load because it's a lot of files. It is not simple, it is a lot. Now we have the histories of 2 weeks. And then when we come down to this part, I want to filter for the last 2 weeks. Now all I need is, for me personally, I only trade currencies. I do not want to look into any other thing on this sheet because other things tend to have like cuts in between their information they provide, but currencies very, very constant. So what I did here is I'm going to now add some little bits of calculation. How do we do that? We're going to build a new column. We're going to call this column commercial bias. I don't want to write too much in fuel, so I'll say commercial bias. Now, what really is my commercial bias? Well, commercial bias is pretty simple. I want to know the degree to which the longs exist in the market. So, at what degree are they longing a particular market? Are they longing it 100%, or are they longing it at 20%? If they are longing it below 50%, then it means they are actually shorting that currency or market. And if they are longing it above 50%, it means they are really going long on that market. They want to go bullish. So what I will do is I'll say the gross long divided by, open the bracket, the gross long again, plus the gross shorts. So what we have here is actually going to be percentage, but I won't make it percentage yet. So this is the first one for the commercial longs. Just to show you what it really is, I'll take it close to commercial longs and then we'll convert it to percentages. Now in percentages, this is what this interpretation really is. We're going to start with the first thing here. The first thing here, we see that they have this is supposed to be here. So this is good. Okay, so the first symbol here is AD, which is Australian dollar. The gross long, the total long contracts they have is 121,539 contracts. The gross short contracts they have is 71,826 contracts. Now, just by mere looking at this, you know that they are going long on this market. Remember what I said? Above 50% is longing, below 50% is shorting. You can see the percentage here is telling me 62.85%. That means they are going hot long on this particular asset. Let's look for a short asset. Directly below it, we have BP, which stands for British Pound. And on British Pound, as of 13th, they had what is it called? They had 55,836 long contracts, and they have 87,895 short contracts. Automatically, just by looking at this, you know for a fact that the commercials traders, they are shorting this currency. And you can look right here, it is 38.85%, which is, like I said, below 50%. That is bearish. I'm going to apply the same technique for speculators and retail traders, that's small traders. So now we have buyers for both small time traders, speculators, and commercial traders. Putting this as decimal as a percentages, it doesn't really do anything here for us yet, because we still have like a very short, not really short, but something else to do after all of this. Alright, so as it is right now, we have everything we're looking for on Power Query. We're done with the query part, and all we simply do is we're just going to come here and close and load. It's going to take a while. It's going to try loading the data, and it's going to put it right here for us. Perfect. We have data. In my opinion, I do not like to see the tables with banded rows and banded whatever. So I'll remove the bound rows. And because I'm going to be applying color filters later, color conditions later, and I want to be seeing the proper colors. If I'm seeing banded rows in between, I would totally miss when something is actually green or red. Again, we now have all the information here. What I will proceed to do is to make these into percentages. I like to see my percentages in 2 decimal places, and then I will select insert just after this. Now I want to do something that is going to be a bit confusing. Now, you know, the first part we're dealing between 0% and 100% to know bullish and bearish. But what if they are still bearish but they are reducing their contracts? How do you tell? How would you be able to see that? Well, it is very simple. What we're going to do is we're going to first and foremost arrange this data in a way where it is in proper order. We simply use the custom filter. So we'll come to sort and filter, and we'll say custom sort. We're first going to sort by symbol, not by date, and then we'll sort by a proper date. Automatically, what we now have is we have 6th and 13th of AD, 613, 613. You can see that arrangement is all the way down 613, 613. Why do I want to do it like that? Well, for us to know changes, right? I'm going to give you an example right here using AD again. If you look at this AD right here, on the week 6th of May, they were longing 62%. But on the 13th of May, they had increased to 63%, meaning they had become more bullish. So how do you tell when they are becoming more bullish or becoming bearish on the currency? Well, it's pretty simple here. All we need to do is we create a new column, and in that new column we'll simply say the current percentage minus the previous week's percentage. And that's it. But there is one small problem. This is BP, and BP is negating itself from AD. To solve that issue, we'll come down to the second rule again, and we're going to apply an if condition. So if AD is still AD in the previous column, then it performs this miracle. If it's not, you give me a blank space. So automatically I'm dealing with the very last week, and the very last week is telling me this is the degree to which they increase or reduce their market. Now I'm going to use a reduction. This is BR. I don't know what BR actually is. We'll find out later in time. But in BR, notice something. On the 6th of May, the week 6th of May, they were shorting this particular asset by 31.59%. And then the following week, they went even further to 27.696%, meaning they became more and more bearish on these assets. Take a look at the commercial longs and shorts contracts, and when you look at them, the differences are clear. The first week was 23,000, the second week was 29,000 longs. Surprisingly, they also increased their long. So how come they were shorting it? Well, the short contract was 51,000, and in the second week they increased it by 76,000. That is about 20,000 plus, roughly 20,000 plus short contracts as compared to just roughly 5,000 plus long contracts. Obviously, you can see now that they became more bearish in this asset. With this in mind, you have solved 80% of the problem. 80% of the problem is literally done at this point. all we need to do now is we will just filter out the previous week and we now have the current week. Personally, this is good enough for anybody who wants to see across board, but we've only done this for the commercial aspects. Now let's do this. I'm going to call this bias change, meaning the direction to which they are changing their bias. If it is negative, they are changing their bias into a bearish direction, and if it is positive, they are changing their bias into a bullish direction. Same thing applies for speculators. I'm almost forgetting what it is. So speculators, I'm going to insert a new column just after bias, and I'll call that one specs bias change. So are they changing their bias over the period of time? And I'm just going to paste the formula and then, rehash, or rather reselect the necessary things. So I'm going to select this against this, and there it is. Finally, for the small time traders, I'm going to say smalls bias change, and I'm going to apply the formula again, but this time I'm also going to make sure I select the proper parameters. And there we have it, everything we need in a go. Like I said, colors is a very good thing. I'm going to filter for just the new week, or before I filter rather, let's just add colors. For the colors, the reason why I want to use colors is colors, the human eyes is attracted to colors very fast. I mean, if you notice, if you're trading, there is a blinker constantly showing red when it's going down and green or blue when it's going up. It draws your attention. The same thing is what you're trying to do here. You're trying to draw your own attention to the information you are seeing. But before I do that, I don't need this anymore. So I would hide this. I'll hide speculators long, and I'll also hide smalls contracts. Now all I am seeing is bias and bias change. I'll select the bias. Remember, the bias are supposed to be 1 between 0 to 100. I'm going to use the color scale for this, and then for all these other ones, I'm still going to use the conditions of color scale, but it gets slightly different, right? It gets slightly different. I'm going to manage the rules. Now, the first color scale for the biases, I'm going to edit it like this. It's a 3 color scale, and we're going to use numbers. So the lowest number is 0, which is 0%. The medium number is 0.5, which is 50%. And then the highest number is 1, which is 100%. That is for the bias. Now for the bias change, the lowest number is not 0. It's actually -1, because we're actually going towards -100% all the way to a positive 100%. Percentile, I'll change this to number 0. The highest value being number again will be +1. This way, when we apply this, we finally have a clear view. Now this is why I said you will no longer need to even read the COT data anymore, because right now with this method I can clearly see what type of trader is bullish or bearish on any asset, but you will not be able to identify what assets you're looking for clearly from here. So to do that, we simply need to get the indications of what these symbols actually mean. And to do that, we will go back to where we downloaded the information from. Go back a little bit and you can see it here. So I'll just copy all of this and I'll create something called a helper sheet. So I'll put it here and I'll call this helper sheet. Right? In this helper sheet, I want all of this to come out in a straight line. So I'm just going to cut and paste at the bottom of each other, and then I will unwrap. Now Excel cannot identify what I'm talking about by itself just by looking at this. So for me to do it in a way that I want to easily identify currencies, like I said, I personally trade only currencies. So for me to be able to identify only currencies, what I'll simply do is this. I'll take the space dash space that is here, and I'll convert it to just a random figure, random symbol. by using replace and find and replace. I want to find space on the space dash on space, and I'll replace it with the $sign. This replaces all of them. Now I'm going to go to data and I'm going to say text to column. I'm going to use a delimiter. This is why I set it to $sign, and I'll say others, and the delimiter is the $sign. At this point, I'll finish. You can see now that I have the names of each symbol written out here. Also, like I said, I am a currency guy. I only want to see currency pairs, right? I only want to see currency pairs. Allow me change the words IES to just Y. Alright, so I have everything I'm looking for. Because I want to filter for currencies, I'm going to call it full name and category. Under full name, I'm going to use a lookup formula. XLOOKUP. I'm going to look for this particular symbol name in this list of symbol and give me the name in return. If you can't find the name, give me an empty space. So it's going to give me multiple names. That is why I added category. So to do category, I'll do the same thing. I'm going to use the XLOOKUP formula for this particular symbol in the symbol list, and then tell me if it is a currency. If it is not a currency, don't tell me any other thing. So this is what I have right now. And after this, I simply filter for currency. And there it is. I have all the currency and the COT bias. I'm going to save this file. I'm going to save this file on my download folder. I'm going to save it and overwrite this one, right? I'm going to save this file. So take note, this file stopped on 13th. Now, when we download this file, we are downloading the 20th, which is what I have saved right here prior to this move. So we have the 20th. So what I'm going to do now is, let's say you downloaded the file. It's going to come out as a zip file like this. And what you need to do is you create a folder with proper date name and you unpack it into that folder. So all of this is from 20th. And then I'll copy this folder into my COT data. Now you can see the folder is within the COT data. Like I said, I do not need to read the COT data at this point. All I'll just do is I'll open my Excel file where I have my query. Remember, I just named it COT analysis. This is where it is. I haven't done anything. For me to add the new file, I'll simply come to query and then edit. It's going to take a while for it to bring up all the old things it has done and all that stuff. Now, this is tricky. So you don't mess up all the work you have done, because if you mess it up, you have to do it all over again. When you open the query, you go straight to the filtered column. You can see the first time you did the filter, that is where you are going to. Remember, we only need 2 weeks most times. We only need 2 weeks of information. We don't need every other thing that has to come with it. We're looking for filtered regions, and then we're going to reapply filter so that the new information is now what we are seeing. So we're selecting the filters column. I'm waiting for this to load. You can see the loading sign right at the top here. Those dots passing by. As soon as it's cleared, you see it's now cleared. I'm selected back to the step of filtered column, right? And what I would do right here is I would simply click on refresh. I may not even need to refresh, but you can see 20th has appeared, and that was pretty fast. I have 6th, I have 13th, I have 20th. I can decide to turn off 6th and then press OK. Instantly, Excel is going to recalculate every other process and complete it properly. Like I said, all I am looking for are all the times I filtered on this query point. Every other thing I have done after this would automatically replicate itself. Automatically. I do not need to stress or bother myself. You can see it. The Excel is calculating every single thing that has recently happened. When it's done, it's going to refresh, and by the time I come back, you can see I'm looking for another filtered, and there I have filtered rows. I'm going to dive into that filtered rows and then we're looking at filtered rows. It says I filtered date, so we're going to date, and then under date you can see 20th has appeared. So I'm just going to click on 20th and remove 6th again and say okay. It's going to recalculate the new information with the entire formula I had done. It's just recalculating the latest information I added. It will take some time because the COT data is actually a lot. So, and then the processes we had, you can see so many processes, so many steps taken just to get to where we are. And after this, I'm looking for any other filtered. I don't have any other filtered, so I can dive straight to reordered. And you can see that the dates you are seeing here, 13th, 20th, 20th, 13th, 13th, 20th, 20th, and you're just going to simply close and load. You wait for a while, just wait for a while. You allow this pick up. You notice something, all of these are now empty, meaning this is the correct week. Under this folder, under the sort filter, you can now select on 20th, and instantly, my dear friends, you have a clear view of what the commercials are doing, what the speculators are doing, and what the small traders are doing without even doing much from new weeks. So every new week, the process is simple. Extract the file, take it, put it in a proper named folder, put it into the COT folder, open your query, and then go back to your filtered columns. Refilter for the new 2 weeks, and then load. Once you close and load, wait for a while. Excel is going to run the entire thing for you. I did not even read the 20th data. As you can see, I already have clear bias of what is happening recently in the market. I'll be doing some analysis probably during the week, maybe late in the night, during the day, I don't know. But until then, I'd like to say thank you. Do well to hit the subscribe button, and if you want to stick for more analysis, learning how to trade, fundamentals, there are more videos coming up over time. I had a formal one, economic calendar, teaching you the little bits of fundamentals I know. You're going to see it right here. Thank you for watching, and peace.